All right, what's happening, ladies and gentlemen? Welcome back to another setup. My name is Lorenzo. I'm the co-founder of the Limitless Trading Academy, and here with you today, another week ahead of us, guys, with a bunch of amazing setups. Make sure this is your daily routine. You wake up in the morning, you check out Lorenzo Corrado, you check out the Limitless Trading Academy, all the setups that we have shared for you, and you should be fully prepared. Now let's dive straight away into some action here, guys, because we have a bunch of things to go through at this particular moment right now. It's gonna be incredible, okay? Right away, let's dive into it real quick. I'm gonna go into a chart of the euro. Before that, or after that, I'm gonna talk a little bit about the news, about what you can expect for the next coming days here. So very important, guys. This is absolutely crucial. We talked about this last week here. By the way, a big shout out, and let me see what we have in the chat here today. Also very nice to see my man Matty, Crypto Noob. I see you guys, amazing. Okay. Weekly resistance, right? We talked about this weekly resistance right here for the euro index, okay? This is the chart that represents the strength of the euro. We said we're gonna reach that weekly resistance around the 1060. Look at where we came to, okay? We came towards the exact level right here, which is the 1060 level at this particular moment. We could not break it, guys. We could not break it. We have closed a strong weekly candle below it. The next weekly candle immediately opening bearish. Okay, very important to mention. Now, let's take this to the 1 hour. Okay, and look at what we're seeing here right now on the 1 hourly. I don't know if you guys can see it, but this looks dangerous. Okay, this looks absolutely dangerous right now for the euro. Right here, look at how we are having this upsloping trend line heading into that weak resistance here. In my opinion, potentially significant amount of liquidity building to the downside right now. So I'm very careful with the euro, but this could provide us with some serious sick opportunities here against the euro in this case right here, okay? So our goal is to find stronger currencies for this next coming days against the euro, okay? And the way I do that usually is to simply look at one particular website right here. You can look at it for yourself as well. It's called the currencystrengthmeter.org. Highly recommend you to absolutely go through it yourself. Let's see if we can zoom in a little bit here. I think so. Yeah, perfect. Look at that, guys. Okay. Euro extremely weak. We confirmed this already with the chart right here. So that's a good confirmation bias. Hope you guys can see it clearly. But anyways, this euro, look at it. 3 stars at this particular moment. Very weak. Same as the Swiss franc. Same as the Canadian dollar. And look at the dollar. Dollar is not looking that strong either. However, the strong pairs are right now, the strong currencies are potentially the Japanese yen and the Australian dollar, okay? Look at the Australian dollar, look at the Japanese yen, and now look at what we're currently seeing right here, okay? Number one. 1 + 1 is 2, right? So we look at the euro index being weak. That's one layer. We knew weekly resistance came into play right here, so we have to start paying attention. We as traders always wait for price to come to our key levels in the market for us to take action, okay? So we don't have to chase the market. Now we have set key levels of particular currencies that we are interested in trading, commodities, whatever it is, and based upon a reaction, we take action, okay? So in this case right here, you've seen that we've consolidating, we've expanded, and we're now trying to pull back up in that consolidation range here, and it seems that it could lead in towards the same old trick here, guys, that consolidation, expansion, retracement, followed by a potential continuation to the downside. Now combine that with the currency strength meter index, which can help you with potentially showing you the stronger currencies against the euro. And that could be in this case, the Australian dollar, okay? Look at the euro against the Australian dollar here. And look at what we're doing on the 8 hour right now at this particular moment. We're getting pushed down quite aggressively right now. And this is super important in regards to the timing for you right now, right here, okay? 49 minutes left, 8 hour candle closure. So this is what I like to see here. Coming on below crucial support right now, breaking crucial support at this particular moment, potentially pushing us further down here. So we had support here, we had support here, right here, had some resistance here, kind of breaking this right now, right here at this particular moment. Now let's take this to the lower time frame, okay? Very important stuff here. This is where we can start shorting the euro against the Australian dollar, guys. I'm not joking here. Entering at this particular moment right now, potentially targeting the 165.401. Okay, very important. Euro could potentially start breaking down, getting rejected, pushing us further down. Australian dollar extremely strong. Potential target 164.5041. Heading in that direction. We have another 40 pips, 40, 50 pips to go here. Okay, keep a very close eye on this one. Could be an immediate scope, but something that I'm very, very interested in. Okay, next up is the Japanese yen basket. Look at that. Okay, we had the currency strength index meter. All right, number one. Australian dollar, great. Japanese yen, looking quite decent here. Okay, look at what the yen is doing. We came down eventually. We got rejected at the value area low. We had that beautiful, beautiful long position with our team right here. Beautiful. We had that expansion. We created that breakout to the upside here. We said we want to come into the 6,600. We came even further. Rejection at the value area low. Coming down while building again new potential buy side liquidity here. Breakout, retest, potential continuation to the upside here. So again, number one, Euro weak, Japanese yen breakout, retest, approval. Okay, there we go. Euro against the Japanese yen, showing us that break right now. Okay, do you guys see how I look at the market right here? How I also in the weekends already look at all the currencies and potentially see, okay, these are at key levels right here on the macro. So I can take action. I can put these two baskets together and I can make a conclusion for myself which potential trades I'm going to take here. That's why it's such an easy guess to go for the euro and to really capitalize on what you're currently seeing here. So again, breakout potential right now confirmation. I am targeting potentially the lower levels here, roughly around the 162, taking us back, guys, towards this particular range right here, okay? This particular range, potentially pushing us further down here, coming back, retesting this particular range right here, pushing back down here, okay? We're looking very tightly for the euro, but the euro is just looking extremely weak at this particular moment. So two beautiful, beautiful trade setups. Now, before we continue with some charts here, guys, okay, I quickly wanted to show you something right here, which is kind of important to mention right now, okay? We have two extremely important weeks ahead of us here. So I want you to be fully prepared for that. I don't want you to be tunnel visioned in 5-minute time frame setups all the time right now. I want you to understand that we're reaching and nearing the yearly closure, okay? So due to that time here, we might expect some serious volatility, but this also could include potentially a reason for us to pivot on a lot of different pairs, a lot of different assets right here. So I'm gonna go over a couple of them in a second here, but just to highlight what we have this week, okay? The building permits are right now positive for the dollar. We're gonna talk about this here. This is why the euro also is not reacting that good, okay? Especially if the news comes out positive. But the consumer confidence, extremely important. We wanna know what's happening in the month of November in regards to the strength. The consumer confidence, extremely important signal for the overall US economy, okay? Then, next up, the CPI for the euro. 2.8% expectations, super important. PCI indirect price index measures the prices and goods excluding food and energy, also is going to be extremely important. And then the ISM manufacturing PMI. All right, this is this week. All right, combine it with Jerome Powell speaking, and then look at next week. Okay, next week we have again the ISM, the S&P Global Services, the jobs openings, the ADP non-farm employment, and then of course the NFP on a Friday here. Okay, so one more time, guys, look at the month of December here. We are now in this week right here. Okay, we're gonna see some serious news coming right there at the end of the 1st of December. The NFP will be right here at the 8th of December. And then we have practically, guys, 2 more weeks to go before we're reaching, you know, Christmas time, when the market will rapidly slow down, when actually most of the markets are going to be closed, including the first 2 or 1 week of January, where not really something is happening here. So I want you to just be aware of the fact that this could be the case right now, where you have to prepare for some major volatility and some pivots in the market here, okay? Just be aware of it, guys. It's gonna be extremely important, because this is where you can truly capitalize also on the yearly closure, okay? The volatility will increase, therefore the opportunity as well. So let's take this information and let's continue our process here. We're gonna talk about gold in a second, but for now, let's look at the dollar here. Very important, we came down, significant, okay? We saw it coming down right here, okay? We talked about the 8-hour support, all right, last time. We held support here beautifully at that 8-hour level at 103.25, okay, or 275, all right? That was right here. We're still there, okay? We are still there at this particular moment. And as you guys can see, we're starting to build that serious trend potential looking to hold here. And let's see if you could potentially see some sort of, breakout scenario. But at this case, to be honest, guys, I am not that confident yet that this will actually happen within the next day or two, okay? I do believe that there is definitely a scenario as well where we potentially can come back down towards the 102.25, okay? And the reason why I'm saying that is because if you look here on the 8-hour chart right now, there is not a clear sign, and especially if you zoom out here on the daily, that there is a chance that we could push down further, okay? That first initial bounce was fantastic, but the moment it comes back again, usually does not lead or shows us that there is not enough demand in the market to push us further here and to create that breakout. So yes, I see that trend. I do not want to get trapped potentially. I'm aiming for a little bit of lower targets for the dollar here at 102.4, 102.3, somewhat around that range right here, okay? So a little bit further downside for the dollar, but I do believe at some point we're gonna come down, and what we're gonna do is then eventually we're gonna bounce and potential breakout to the upside and make that move once again here, heading in towards the actual weekly news that's coming along this weekend, this Friday, okay? Very important stuff. Now, gold, very important, all right? Gold did it. Gold took out the previous highs here, okay? So this is gonna be an interesting one, guys. And the reason why I'm saying that is because usually when you see that correlation or negative correlation with the dollar, it's very easy to predict potentially what gold is gonna do here. But in this case, reaching the yearly closure, there are many, many different variables that come into play right here, okay? Such as companies closing down their positions, hedging themselves against, their portfolios, to present better yearly reports, quarterly reports, tax benefits, you name it, okay? So at this particular moment, I see gold right now as its own entity, and I'll simply look at the daily chart right here, and I look at the levels that I see. What I trust though still is volume traded previously in price action. And whenever you look here on the daily and you look here at this particular level at the point of control and you come back toward that range, this range right here, this is where we at right now. So if you're thinking about longing gold right now, be very careful longing gold around this level, because I do believe right now at the moment that this point of control can cause some problems for you if you're gonna go long here right now, okay? That's the only thing I'm trying to say here. What you can see if you look here on the 1 hourly is that you can see that clear rejection as well at 2016.248, okay? So what I want to see personally, number one, I want to see this previous high right here at 2007, okay? 2005, 2007, what we talked about here. I want to see this getting broken. Potential scenario where we actually start pushing back down. So that means that we would potentially come down, we retest, we couldn't break it, we failed to break, there's not enough strength or demand to break back up again, and that pushes us further down back towards this bigger range right here, taking out all that sell-side liquidity that has been built below here. That's what I'm personally looking for gold here. That's the only confirmation, okay? Another confirmation could be a break out towards the upside, breaking and retesting the point of control, testing it as support. However, if that's the case, guys, I want to see at least a daily closure for gold happening here, okay? That's what I need to see at this particular moment. We have the New York Stock Exchange opening up very shortly here. We also have this strong daily area of supply, and we have not even tapped into that upper echelon right there as well, okay? So for now, I'm still leaning more towards potential pullback scenarios for gold. You guys know why. Point of control, taking it extremely serious. We have seen that first rejection. We're building something very interesting here. We just do not have that confirmation yet. But that confirmation is gonna come very, very soon. At least that's what I hope here, okay? Then combine that with the treasuries, all right? 10-year yield, negative correlation, gold yield. Usually we're seeing right now that we're actually holding at support right here. We have been reacting at it. And the beautiful thing about it is that they have a strong weekly closure. This is overall a pretty good sign here for the yield, okay? Just wanted to highlight this right now. We have seen that bounce that we talked about last week. You guys know it, okay? We talked about this right here. Now at this particular moment, we have created and we have taken out the previous high that put in the low, okay? So this was the previous low right here. This was the high. We have taken out this high right now, and we're now pulling back. So we could easily pull back in towards that range and create some sort of upsloping trend back towards that top range right here, which is going to be the 4.65%. If that's the case, gold is going to break down, and gold is definitely going to go short here after that rejection from the point of control, okay? Super important stuff here. When you look at the yield, just gives you an extra confirmation from gold. With the dollar, I will be a little bit more careful, but wait for that confirmation if you are interested in trading it, okay? Then, a couple more charts here. One of these charts is Bitcoin. Right now, a lot of people are panicking at this particular moment. We talked about this. I actually made a video on this in our crypto VIP channel, where you could see my full breakdown, full analysis, 20 minutes long, all the fundamentals of why I think potential Bitcoin will come down here at this particular moment before it came up. And it did came up before. It swiped the highs and is now pushing back down here. However, the only thing that we need to see on Bitcoin, guys, and this is super crucial, is the fact that every single time, and this is just pretty much going back to the basics, right? And especially on the weekly time frame. Every single time when we're occurring and when we're seeing these major pivots right here, guys, every single last candle before the weekly drop or push up creates a strong inversion, okay? That means that we're creating a strong top or bottom wick before we actually are making that move here. So if we zoom in, and this is super crucial for you to understand because people are starting to enter shorts right now for Bitcoin, be extremely careful because this is not the top wick that I'm talking about, okay? What you want to see in this case is you want to see a major push up, okay? Followed by an immediate push down. That's when I know, hey, this could be turning into that major pushback to the downside here, back towards the $33,000. In this case, we have not created that wick, okay? Every single time when we're looking at a major move, it fakes out, it induces the last people to go and get long, to FOMO into the market, following by pivoting and turning around here. So very important, that move has not happened. I do take that extremely serious. We're gonna find out how this develops over the next coming days here. But based upon the next chart I'm gonna show you right here, the Bitcoin Volatility Index, we're reaching more and more volume, okay? So the moment, guys, and this is gonna be crucial, the moment we break this particular high, okay? This particular high at 2.27, that's the moment when I believe the most volatility will start coming into the market. I think Bitcoin starts moving more aggressively. This could happen later today. This could happen to the New York Stock Exchange Open. We need more volume, but this chart right here and this alert, which I'm gonna set right now, will potentially give me that signal for me before entering a position right here, okay? Volatility index, extremely important, extremely powerful. You want to know when the volatility kicks in because you do not want to be in the market for no reason when nothing is happening, okay? That's where this chart is for. Now, last one, oil, guys, super crucial for oil. We said one more time, right? We're going to be here, we were here always to be transparent and honest right now. Like I said before, I was in a fantastic and beautiful position. We had this position right here for oil. I said I want to go up, I want to pull back. The moment we reach into the 77, I'm going to stack onto my position. I did that. I had an average order at $75. Got stopped out on break even while I was in profit on this trade. Could have been a beautiful trade. So unfortunately, didn't play out. However, I said if we pull back and we're going to come down and we're going to create bullish structure and we're pushing back down again, that's when I'm going to start looking for new potential entries right here for oil, okay? And we're heading now directly into that direction right here where we came down back to the 74 again, all right? Same thing, this is what we wanted to see, 74 again. Now we want to break the previous high right here at 75.469. This is what we're doing currently, okay? Hourly closure, pullback scenario, and this is where I'm going to open my first new long position for oil at around 74.963, 80, okay? So now one time, 74.80, pushing back into the 50% of that range, the 618, pushing back, looking for new setups right here, putting my stop loss right below, okay? So one more time, if we have an hourly closure below, or above. We pull back, enter right at the 5618 Fibonacci or this area of the month, stop loss below, targeting at least the highs, see how that develops, see if I could take this day trade into more of a swing trade position right here, okay? So quick sum up for today, guys, okay? Currency strength meter index, all right? Look at it. It doesn't show you, what is actually happening, which currency, is going to be strong in the future. It shows you what the strength of a currency is right now. It's up to you to find the potential future trades right here. But this is a very good overview to confirm your bias. So we knew the euro was weak. Okay, one more time. Euro weak. Currencies that were strong were the Australian dollar against the yen. Very simple. Euro, Australian dollar, euro against the yen. Okay, that's what we're looking for at this particular moment. Then, dollar index, keep a very close eye. I'm still not there yet. I do believe that the daily didn't give us that confirmation. Very important to mention as well, as gold potentially is pushing us up one more time to the point of control. Last thing, two scenarios. One is up and pull back, or one is down, pull back, rejection, or push up. Very, very straightforward, guys. But that confirmation is absolutely key when looking also at the 10-year yield. Okay, the 10-year yield is going to give you that confirmation, because if we bounce from here, gold is most likely going to come down. All right, so far, thank you guys so much for listening. As always, highly appreciate it if you could smash up that like button here. If you're new, make sure you hit that notification bell. I'm going to be here for you on a day-to-day basis here. Extremely excited to host you. Make sure you tune in to the Discord, where we always have the V3 live traders actively trading right here after this session. I'm going to be back tomorrow once again. As always, new setups, new value, and new insights. See you tomorrow.